Hello, my name is Steve Bigelow with the Candlestick Forum. Today we saw a potential reversal signal in the Dow, a shooting star signal in the overbought area. This is evidence that the bears might be stepping in. You can also see that it kind of came up here to the top of the channel. Doesn't necessarily mean there'll be a full scale reversal, but it does imply that if it opens lower tomorrow, they should be profit taking in the Dow stocks or the stocks related to the Dow that could take you back to the T line in a couple of days. That would indicate taking profits in some of your long positions. We also had a warning on Friday when all the markets were up strong. We could see that the NASDAQ could not close above the T line. That still gave us cause to think the downtrend might be in progress, which would have been a very easy way to assess the direction of the market based upon the Doji type day. Had it opened positive and traded positive, it told us that the T line was not acting as resistance anymore. The fact that they opened it lower was a good indication that the downtrend remained in progress over in the NASDAQ area, and they couldn't support again back at the 50. That might imply a wave one, wave two, wave three to the downside, more downside in the NASDAQ. That, along with a sell signal or a sell confirmation of the shooting star in the Dow, would tell you you'd pretty much want to be closing out any long positions that were showing signs of weakness. So when do you take profits? When you see a sell signal. Doesn't necessarily have to be in the overbought area, but we took profits on pause based upon the fact that it hit the top of this resistance level and did a bearish engulfing signal. Could it still go up? Yes, but now we would just be hoping that it would turn around and go up. The probabilities turned against us. We had very good profits in Nucor ever since the fry pan bottom breakout. But what was the alert today? The fact that they gapped it up in the overbought condition that far away from the T line, we started closing out the position. Closed out 3/4 of that trade. HZO. You can see that even though it broke out through this level, our J-hook pattern, wave one and wave three were approximately the same. And today they did a gap up in the overbought area and did a shooting star signal. Closed out this position because the probabilities were telling us that it looked like the bears were starting to take control. So candlestick analysis uses the very simple logic of the Japanese rice traders of where should trades not be trading if an uptrend is in progress. We bought big Avid because of the kicker signal. But the fact that they opened it lower and continued to trade it lower and closed below the open of the previous day in the overbought area said, let's move our money someplace better. We're short some good short positions. You can see the logic of Daku, kind of a double top, closed below the T line with a bearish engulfing signal, was followed by kind of a bearish doji sandwich. What's the T line rule? You just stay short until you see a buy signal and a close back up above the T line. Riot, big bearish engulfing signal, bearish J-hook pattern, followed by a bearish doji sandwich, followed by another bearish doji sandwich. More relevant because look where it did the doji sandwich right here at this low, telling you that support level is not acting as support. More than likely you're in wave three to the downside. And we bought puts on TDC. Look at your doji gap down, failure at the 50, continued down. There's still a lot of force. That shows a lot of force to the downside. So knowing that the indexes are starting to sell off, especially the NASDAQ has been trading off, the short positions are working very well. So up to this point, we've been recommending having both long positions and short positions in the portfolio. But if the long positions are starting to get a little bit iffy with the Dow and the transportation index both doing shooting stars today, and the S&P 500 selling off, and the NASDAQ selling off hard, the probabilities are starting to say, let's have a stronger presence of short positions in the portfolio. However, remember the pattern benefits. When you see a fry pan bottom, they're usually going to perform even if the market goes in the opposite direction. So right now, we're going to be watching. If the pre-market futures are showing a lower open tomorrow, start adding shorts and be ready to close out long positions. That'll be it. We'll see you in the chat rooms.